everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. I started last week's commentary by saying this has been a very interesting week. All three of the indices that we track, the NASDAQ 100, the Standard & Poor's 500, and the TSX, have all risen to within 2 to 4% of their key index breakpoints. Well, this week, never mind the near miss from last week, today all three of the North American key indices have traded right up to their breakpoints, not even 1% away, but right precisely to those breakpoints. So, what should we expect here from the FANG stocks and the market itself? Clearly, a breakout by the market here would be bullish, despite the relatively weak overall potential in fair market value terms. On the other hand, a failure to break out would confirm that the bear market that we had been in until the rally that started in June, that is still in force. While it's impossible to predict with any confidence at all what will transpire here, maybe the FANGs will give us some clue as to what to expect. But before we take a closer look at those FANGs and what's going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with those FANG stocks which have given us a clear message. And the first one, of course, is Apple. And as you know, all along I've been bullish on Apple, and I remain so. And I have no reason to change my mind whatsoever. The second stock is Amazon. And Amazon had bottomed at its bubble price at 7.4 times book value, okay, which actually was a 30-year absolute low for this stock. It had one nice bounce up to its HV1 10 times book, backed off again, and very, very recently has broken out, pulled back, and looks to be heading higher. The third stock of quite a bit of interest is Netflix, and it had bottomed, well, not quite at its super growth price, which again was a 20-year absolute low for the stock. As I said before, I think that maybe investors had been looking at that and saying, you know, maybe I'd better buy before it gets there. And they had been accumulating the stock because the stock never hit the super growth price. However, it did move up to the LSG price, which is 4.5 times book value, has broken out and pulled back, a perfect technical signal, and has been moving higher. Well, how higher? Well, let's take a look at another stock in its same streaming business, Walt Disney. Walt Disney has just made a powerful breakout over its growth price, 2 times book value. It looks very much to me as if our Netflix may work higher, and maybe quite a bit higher, because it is fairly common when stocks break down below their bubble price after having been up very, very high that they will go down to their super growth price and then rally back to the bubble price before breaking down. I have seen that in many, many, many cases. It's going to be interesting to see how this one plays out. Now, there are 2 stocks that I would rate as sort of tepid, if you like, uncertain, kind of fellow travelers, I almost might say. And Alphabet is certainly one of them. And look at this action here. Okay, either side of a breakpoint, that is very uncertain trading action. Okay, yes I will, no I won't. Yes I will, no I won't. Well, right now it's yes I will. The second stock that's very uncertain but has broken out across its super growth price, again 3.5 times book value, is Meta. And again, it's a yes, no, but currently it's a no. At least it's a yes, sorry. So we have 5 stocks of the 8 FANG stocks which are kind of saying, well, I think we could head and maybe head quite a bit higher. 3 stocks have yet to confirm. Microsoft is the first one. It's got to reach its HB2 before it can actually say, hey, we've broken out and are going higher. The second stock is Tesla, which had been performing very well, had risen right back up to its HB5, which is 26 times book value, but couldn't break out any further. So that's so far a no as far as the market moving much higher is concerned. And the last one is NVIDIA, again, which got up to its HB3, which is 16 times book value, but couldn't make it any further. And indeed, when we look at other stocks in its index, they are looking kind of poorly. So we've got 3 yeses, 2 maybes, and 3 not sure, but I don't think so right now. So what I see, in summary, when I examine the FANGs today is probably a microcosm of the market. 3 of the FANGs are giving thumbs up, Apple, Amazon, and Netflix. 3 are telling us that they're not certain, Microsoft, Tesla, and NVIDIA. And 2 are sort of fellow travelers, Alphabet and Meta, kind of going along with the bullish crowd, but ready to back off if the crowd suddenly turns hostile. Last week, I observed something that I generally do not expect. Stocks breaking out and giving technical buy signals at the possible peak of the market rally. This week, 5 of the 8 appear to be pointing higher, although 2 are sort of mushy, even if they're on the positive side. Sort of. And only 3 have yet to commit to a bullish trend. This is the first time in the 3.5 years that I've been doing the FANG Friday YouTube videos that our valuation methodology, structural valuation analysis, has not been dead clear on what direction you should be taking, both overall and for the FANG stocks. And I hope that you yourself can clearly see why this is the situation. While the overall market is very expensive and the apparent fundamentals are on the weak side, those who are bullish have overwhelmed the bears in the crowd and fought them to a virtual standstill, in a manner of speaking. That is, the market is right at the fill or kill stage. Well, at least you know what to look for: a reversal or a breakout, even if no one can know today which it will be, as the market is right on the cusp. Actually, it's kind of exciting, isn't it? Last week, I enumerated the 6 ways that SVA can earn its keep, all of which you have seen in action in our FANG Friday YouTube series. This week, though, only one of them really counts, the 6th and final one, namely, should you be getting into or out of the market? Well, we're about to find out. Now, if you'd like to join our investment community and find out what to do with your portfolio holdings, go to www.strategicanalysis.ca/pricing and get started. This is not the type of market that you want to risk navigating alone. The potential losses and or gains are substantial either way, particularly with the overall markets where they are right today. So join our investment community today. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and the senior portfolio manager at Nicholson Associates Asset Management, reminding you that nothing, including investing, is difficult.